How does Morgan Stanley handle mergers and acquisitions? M. Onda. Have you ever wondered how major financial institutions like Morgan Stanley manage the complex world of mergers and acquisitions? Let's break down their approach in a straightforward way. Morgan Stanley follows a structured process that aligns with the principles of capitalism, focusing on efficiency and value creation. Initially, the firm engages in discussions with clients to understand their strategic goals. Whether a client is looking to buy or sell, Morgan Stanley identifies potential targets or acquirers. They also assess market conditions to position the deal favorably. This early stage is crucial for setting the groundwork for a successful transaction. Next comes the valuation phase. Morgan Stanley uses financial models and market comparisons to determine a fair price for the companies involved. This valuation reflects a market-driven assessment based on assets, earnings potential, and growth prospects. It's all about finding the right price that aligns with the current market. Once the valuation is complete, Morgan Stanley develops a detailed mergers and acquisitions strategy. This strategy outlines objectives, deal structure, financial metrics, and integration plans. The goal here is to optimize the transaction benefits, focusing on maximizing shareholder value and operational efficiency. After establishing the strategy, the firm leads a thorough due diligence process. This involves examining financial records, legal contracts, and operational data. They also look into market conditions to identify risks and validate assumptions. This step is essential for informed decision-making and effective risk management. During negotiations, Morgan Stanley advises clients on terms, price, warranties, and deal conditions. Their expertise helps secure favorable outcomes for clients. This role exemplifies how financial intermediaries operate within a capitalist framework, facilitating deals that reflected supply and demand dynamics. Once the terms are agreed upon, Morgan Stanley assists in deal completion. They oversee the signing of definitive agreements and ensure regulatory approvals are in place. After the deal is finalized, the firm supports integration planning to combine operations efficiently, aiming to realize synergies and enhance value creation. From the perspective of capitalism, Morgan Stanley's handling of mergers and acquisitions reflects principles of market-driven resource allocation and competition. Their recent acquisitions, such as the purchase of ShareWorks in 2024, illustrate strategic moves to expand services and capture new market segments. Additionally, Morgan Stanley stays informed about broader economic and regulatory trends that impact mergers and acquisitions. They keep an eye on shifts in antitrust enforcement and financial sponsor behaviors. This awareness allows the firm to anticipate market conditions, maintaining a competitive edge in facilitating deals that contribute to capital formation and economic growth. In essence, Morgan Stanley manages mergers and acquisitions by combining rigorous financial analysis, strategic advisory, risk assessment, and negotiation expertise. This approach enables transactions that align with the goals of efficient capital allocation and value creation.